We're now at 4680. AMC's CEO Adam Aron making his case to investors. The AMC apes last night on YouTube.
Here we go.
You know who the real king is? The shareholder is king. You are fully in charge.
Absolutely.
That's why we're not asking you to authorize 500 million shares. We're authorizing you to vote for 25 million shares because we don't think you'd vote to approve 500 million shares. We think you might vote to approve 25 million shares.
I knew they would do that.
That's why we take what you think, we take what you have to say very carefully, and we give a lot of thought to what you guys think. And it's for a simple reason. Like, we exist in the capitalistic free market system.
Joining us right now is maybe what could be described as the leader of the AMC apes, Trey's host, Trey Collins. Trey, it's good to see you this morning. You've been early and thus far on all of this, right? Hundreds of thousands of people are watching your videos daily. I was just looking at some of the numbers on your latest post, which is over 500,000. Millions of people collectively have been watching this. I want to talk to you about what's happening here, the technicals and what you're seeing and what you're saying. But I also want to talk about some of the larger public policy issues around trading versus investing and speculation and the like.
Here we go.
Before we get into any of that, give us a little bit of your background.
Here we go.
Who are you?
Well, Andrew, first off, I'd like to say thank you, obviously, for letting me come on the show here. I'd like to just make one small, correction to the headline. I don't consider myself the leader of the apes. As a retail investor, I consider myself an ape. And just the same as everybody else considers themselves an ape. If you own 10 shares, 100 shares, 1,000 shares, 10,000 shares, that means that you're an ape. And I think that's the huge embodiment of the movement. And that's just one small thing that I wanted to say. But, my background in investing, I'm a 23-year-old guy, turned 24 this June. I did not start too long ago. And I actually take pride in that because I think it shows that retail investors, the little guy, quote unquote, can come pretty far in not a very long period of time. I work an 8 to 5 government facilitated job. I'm doing this interview with you before I actually go to work. And if just a regular Joe on the street can learn this sort of stuff about stocks and make money doing so, I think it means that anybody can, because I came into this and learned what I had to know, before AMC started. And, here we are now.
So there's a lot of people, Trey, who look at this and say, is this investing or is this speculation? Is this gambling? What do you think?
Everything in the market is gambling.
I think AMC, as it sits right now, is about 15% fundamentals and 85% technicals and data. So when I say fundamentals are important is because back in January, when the short squeeze thesis began, right, the shorts had a pretty decent case. AMC was fundamentally pretty weak. The bankruptcy was on the table. But with each passing day, each passing month, they've continued to generate cash, $587 million, as soon as their latest, offering into the market. And with each passing month, as they raise more cash, cash is king, the short thesis weakens, and that's where fundamentals come into play. Now, the technicals come into play when you consider some of the algorithmic trading that's taking place with AMC, the failure to deliver that takes place when call options run from out the money in the money. As we know, there's insane call option trading that's taking place, lots of liquidity going to AMC stock, which can drive some volatility and price action on AMC. And then lastly, obviously, for a short squeeze to happen, you have to have high short interest. Now, the short interest on AMC as it is right now, last I checked this morning, was 17.5% of the free float. Now, you can't have a short squeeze without shorts covering. That's as simple as it is, which is why I firmly believe that there's still more room on the table. Don't get me wrong. There is risk involved with every sort of trade that's not based on fundamentals alone, but there's money to be made on momentum, and that's what this is right now. It's a momentum play, and it's a movement. It's a story, man. I mean, I think the apes are truly trying to tell the story about why they think they deserve to be heard, to make money, because the short sellers have been betting against retail investors for a long time, and I think it just seems like the retail investor has the upper hand.
Well, but let me ask you about that, because at some point the music's going to stop, right? It typically does in almost every case. And so when people talk about speculation, when they talk about momentum, they often say that it's a bit of a greater fool theory, right? You can win now, but somebody's going to lose on the other end. And I wonder what you tell the other retail investors about this. I know that this is a story, and we talk about diamond hands and paper hands. Some people are doing this because they're trying to make money. Others say, as you just described, that they're doing this as part of a larger movement.
Yes.
If it is a movement, what is it trying to prove?
I think this movement is trying to prove that the dumb money. That's a term that gets thrown around a lot by financial media regarding the retail investors because of the casinoification, essentially, the gambling, aspect of this investing. This is a message that I've preached, for myself. Something I've tried to live by is you only invest into the stock market what you're willing to lose. I view, AMC right now essentially as money that does not exist and I might never see again. And I'm absolutely okay with that. And if you view AMC stock that way, you're walking away okay. So once you take that emotional aspect out of it, the gambling, the casinoification, which I've never, you don't have that aspect on the table, you could come into this and truly rest easy, knowing that wherever this is going to go is where you want to bring it individually as a person. You get to sell, you get to buy whenever you want. I mean, that decision ultimately is up to you. I think the message, with all that being said, is to the short sellers saying, look, like we see some of the algorithmic trading, we see some of the failure to delivers that have been going on. We see a lot of these FINRA fines and reports coming out talking about, mal reporting of different data and different short interests. And they see that. They want to speak out about it individually as the retail investors, as the apes.
I get that, and I appreciate it. Let me just push back on one piece of this, which is
here we go.
There is something happening here, which is a divorce from reality in terms of the fundamentals of the company, of the business. In fact, yesterday, Adam Aron and AMC said that effectively when they sold their shares to the public, by the way, who've given them now potentially a new lease on life, we'll see, in terms of the cash that they're raising. But for the company, it's not a game, right? It's not a casinoification or a speculation. It's a business with employees. And so how do you think about that piece of this?
I think Adam Aron, and I get a lot of flack for this. I get called a 23-year-old naive kid for trusting what the CEO does, and I'll take that heat every single time because I believe in history, trends, and facts. And the facts are that Adam Aron is setting the bar in terms of CEOs, reaching out to retail investors and caring about what the retail investor is asking for, what they're looking for, what they care about, as well as watching out for the long-term health of the company. They've raised well over $1 billion in 2021 alone, which is really going to help set them up for the next 1, 2, 5, 10 years. They can acquire different family movie theater chains who did not survive COVID, who did not survive the quarantine process, who might never open their theaters again, right? And really do some great long-term success. Now, with this short-term, momentum trading, there inevitably will be people that don't invest in AMC long-term. But I think there are going to be lots of people who do invest in AMC long-term, myself being one of them, because I truly do believe there is a long-term fundamental, value for AMC. Is that right now? I don't think so. I mean, I think that most of the retail investors of the apes understand that this is not the true fundamental value of AMC, and that's where the risk comes into play, right?
So, Trey, what do you think the real value of AMC? What do you think the real value of AMC is? And you look at some of their competitors that are also publicly traded companies. You could look at the bonds, which are trading at a pretty steep discount.
I hate that he cut him off.
The market cap for AMC, if I remember correctly, was just over $10 billion not too long ago. And you look at companies like Cinemark, which were trading at about $1 billion. Now, I think that you look a couple quarters down the road, we get more quarantine restrictions to be lifted, and the revenue starts rolling back in for AMC. You've got two things that are going to start happening. You've got a lot of these hot movies that are coming out, which are going to roll in some great revenue, and you've got a new factor that can't really be accounted for and quantified, which is social and cultural sentiment towards the company itself. There are people that genuinely love AMC stock simply for the culture that it's built, the people that have come together for some sort of love for the theater, and the money that's made people. I think there's going to be gratification towards the company that's ultimately going to help them make money. With all that being said, I truly do believe that the fundamental value of AMC would be somewhere in that $20 to $25 range, in 2021, end of 2021, when they're fully back in capacity, fully bringing in that cash flow and that sort of nature.
But that's half of where it is today.
Correct.
So what do you tell if you're saying that the value of it's half of what it is today? What do you tell your followers who are buying it today, who eventually, at some point, it's going to go down, right?
Fundamental value is different than momentum trading, right? Now, just because, so this is a fact. The market is The stock market tells you exactly what every single security in the market is worth in that given moment. So at this given moment, if there's somebody out there that's willing to buy AMC stock, it's trading at $47 right now. Somebody's willing to buy AMC stock at $47. That means at that moment, it's worth $47 to somebody. You know, the momentum trading aspect of it, even if it doesn't necessarily reflect on their current earnings or their future projected earnings, that doesn't mean that there's not money to be made. In fact, I know there's a lot of people who have made money out there. I've read some of the stories. I've read of the people who have become millionaires off of AMC stock. You can take advantage of momentum trading. In fact, I think this is a new age of investing.
But I think the question I'm asking is, am I supposed to be concerned that, I mean, people have talked about these types of things over the years as pump and dump schemes where people talk up a stock, right?
Really
and
trying to get
people
him.
who are very educated. Trey, you seem to know a lot about what's going on. And by the way, there's a lot of people online trading this right now that do understand all of the dynamics. But then there seems to be a lot of people who don't. And by the way, people make mistakes along the way. Yesterday, I noticed you had said at one point that you thought when AMC first put out that announcement about the 11.5 million shares, you know, you would put out a tweet telling everybody, no, that's actually old news. It's from a different it's from an old filing, and that proved to be wrong. And so I ask you that because I think that there are people who are listening to you and in terms of how you think about your own responsibility to all of the other apes.
Right, and I appreciate you holding me responsible, Andrew. That's totally okay, and I hold that weight very, very heavily in being careful about the things that I say and put out online. Now, the big message that I've always preached and tried to live by over the last 6 months, and I think what really takes any sort of risk and overexposure to AMC stock off the table is only investing into it what you're willing to lose. You know, especially call options. This has been something I've talked about with the call options chain over the last, probably 3 months, is view these call options, buying a $70, $80, $100, $110 call, essentially as a decent odds lottery ticket. That's what those are, right? Because we can't predict the volatility either up or down in either direction for AMC stock. But I'd say it's a better odds lottery ticket than you've got doing something else. And I'm never going to pretend that's not what it is, right? Because that is what call options are. You're betting that a stock is going up, puts are betting it's going down, So as long as you are really limiting your exposure and managing your risk, managing your exposure to the stock, and you're not putting yourself in a situation where you can't pay your bills, you can't take care of your family, you can't feed your mouth, right? I think that you're sitting okay. And the fundamental value, I won't argue that in the least bit. The fundamental value of AMC stock is not where it's trading right now. But it will come back down to that eventually when the squeeze is all said and done. But the storyline has not been written yet.
Trey, we appreciate you being with us, offering your unique perspective on this. And I think it was a lesson for all of us. And we hope to talk to you again very, very soon as we continue following the apes.
They're playing music over Trey. Yeah.
Trey did a good job. Even with your blood sugar level, like up here, like in a stratosphere.
Okay. All right. Let me cut this off. Okay, let me stop this and actually give my perspective here. So basically, for me, right, I want to take this out of here so I don't show the chat and don't get distracted. But basically, for me, what I took from that interview, right, and I'll get into all of the comments or whatever comes later. I don't know what's going on here, but I took a bunch of things from that. So when he talked about calling himself a leader, it's just like what I said earlier today. It's great to have company, calling, us leaders that are on YouTube, but we're not leaders. We're apes. We're here just to put out the information. And it's great for him to come out and say something like that. It was absolutely amazing. Now, also, when they were talking about the fact that fundamentals drives everything, we understand that fundamentals is not the biggest portion of this. We understand that fundamentals is not even a small portion of it. He said 15%, which is being generous. The only fundamentals we take from this is understanding what the short interest is, the short percentage, understanding, the fact that they haven't covered, all of those things. There's a lot of things short, information wise that we need to understand, and the amount of people that are buying. Those are, part of the pieces that we need to add in. But fundamentals are completely out the window when it comes to this momentum trade that we have here. And we understand that a lot of people are, you're going to have some people that lose money. The more people that make a ton of money, you're going to have some people that end up losing money. But those people that are going to lose money, most of them, if not all of them, are going to be the hedge funds. And that's what we're hoping for, is that they learn a lesson. Now, also, he talked about what are they trying to prove here. And he said something about the fact that, they're classifying us as dumb money, and they can classify us as dumb money, but we're making the right move here. I think what we're really trying to prove here is that the hedge funds really don't control everything, and they make it seem like they control every single move, and we're not letting them do it. We're trying to do as much as we can in order to prove to them that we are, one, smart, and two, we know exactly what their plan is, and we're not going to let them do it. So that's what we're really trying to prove. And also, I have a note here about the fact that, the business, the fundamentals does not make sense, right? For, long term or whatever. But the fundamentals don't make sense on the hedge funds part either. They're trying to short a company out of existence. They're trying to bankrupt a company that's trying to claw their way out of a pandemic. They're trying to take a whole business, a huge business, off of the market to where it's going to take something like Toys R Us and completely, take them off, where my childhood was, was something that was built around that experience. And now Toys R Us is something that's no longer here. AMC, you're saying you're going to take movie theaters away from my children? No, we're not going to let that happen. We're not going to let businesses take these businesses away from us. So basically that's what they're doing. It doesn't make sense fundamentally that they're going to take away a business and, someone that's trying to, claw out of, bankruptcy, or out of that position of, potentially being bankrupt. So again, if you're talking about fundamentals on the side of us holding these positions, there's fundamentals on the hedge fund side that don't make sense either. So also they talked about long-term. It's definitely a long-term position, and you could see that Adam Aron is trying to make it a long-term position while also improving the fact that we have the squeeze available and making people very wealthy. And then the last point I wanted to have was the fact that he brought up this term pump and dump scheme. It's ridiculous to see them talk about a pump and dump scheme, or even mention that term. They do that as a ploy in order to make it seem like, to anybody that's their older viewers or people that are sort of interested in AMC, to make it seem like it's a pump and dump scheme by even mentioning that term, whether we shut it down or not. And it's absolutely ridiculous. But good thing is, exposure is good exposure. So, and any exposure is good exposure. So I'm all for it. So I just wanted to make those points there. I'm going to try and clip this and I'll put it in a different video, but I appreciate everybody watching and taking the time, to view that without any interruptions of comments. So, all right. So guys, quick, I wanted to add a point to this. They added an article. So CNBC came up with an article and basically twisted Trey's words, and this is what they had to say. Trey Collins, the host of Trey's Trades channel on YouTube, said he believes the fundamental value of the company's shares will be $20 to $25 by the end of 2021. No way did he say that. He said, obviously, they took it out of context, saying that he doesn't believe that it's worth, the value that it is. But, with the short squeeze, with the fundamentals really go out the window, understanding that he said that fundamentals are a very small portion of what this overall situation is. And they also have another point. He said, I think that most of the retail traders understand this is not the true fundamental value of AMC. Look, they're taking things out of context to throw these big points at people so that they take this in the article. It's completely FUD that they are creating. And I hate using that term, but it truly is. It's ridiculous. So I just wanted to call that out, that this is a ridiculous article. Understand that any publicity is good publicity for AMC as long as they're talking about it. We know that the squeeze is still relevant. They're trying to push this down, but it's ridiculous that they're going to twist people's words this way. This is what the media does, and I hate them for it. So, Trey, you did a good job. You did a great job in that interview. You've been doing great jobs in all of the interviews that you've been doing, and we appreciate you for it. It sucks that they did twist your words, but, they're going to do that to anybody, especially when they don't really believe in a movement that we believe in strongly. So anyways, guys, hit the like button, hit the subscribe button, and thank you for, watching this clip of, the interview with Trey and CNBC. And hopefully you found some sort of value out of it, but he was just trying to attack the whole time.